Namaste traders, welcome to today's explainer. I am absolutely pumped to have you here because, well, what we saw in the markets today was nothing short of spectacular. If you were watching the screens, you know exactly what I'm talking about. We had extreme volatility, we had sheer panic, and then we got an absolute monster of a recovery. As your guide through these wild market swings, my goal today is to break down exactly what happened, why it happened, and most crucially, what the data is screaming at us for tomorrow. So grab your notepads because we are diving deep into the fundamentals, the sectoral shifts, and the derivatives data.
So here is the million-dollar question we really need to answer today. How does a massive 9% collapse in crude oil halfway across the world suddenly trigger a massive afternoon buying frenzy right here on Dalal Street? Honestly, if you stepped away from your trading desk at 1 p.m. today, you probably came back at 3:30 rubbing your eyes in disbelief at the Nifty closing levels. It just proves that the market loves to keep us on our toes. Today was literally a textbook example of why macro fundamentals matter just as much as your technical charts.
All right, so here's a quick look at our agenda for today's explainer. First up, we'll map out the great market reversal. Then we'll shift to global cues and the crude collapse. After that, we'll cover sector and corporate highlights. And finally, we'll wrap up by decoding open interest data to find our key actionable levels. Let's kick things off with Section 1, the Great Market Reversal. It was a total roller coaster ride today. I mean, just look at the sheer V-shaped trajectory of this intraday action. We opened with a very solid 138-point gap up, right around 24,171. But you know how these volatile markets are. That initial optimism just couldn't hold. Throughout the morning, the index just bled points. By 1 p.m., Nifty had drifted all the way down, aggressively testing that psychological 24,000 level. For a hot minute there, it really looked like the bears were taking total control. But then, magic happened. Post 2 p.m., an aggressive wave of buying interest completely flooded the market. The momentum turned sharply and violently positive, triggering massive short covering that pushed the Nifty all the way up to close near the absolute high of the day at 24,330.95. And the aftermath of that recovery is genuinely striking. Nifty 50 closed out the day with a very strong 1.24% surge. But honestly, the real star of the show today? The Nifty Midcap Select Index. It rocketed up 2.60%, literally making history today as the first major index to completely shake off this recent market correction and reclaim all-time highs. On top of that, the market breadth was incredibly healthy. We saw 408 advancing stocks against just 92 declines in the broader Nifty 500 universe. When the broader market steps up and participates like this, it shows genuine underlying strength, not just index management by a handful of heavyweights. So, what exactly was the catalyst that flipped the switch at 2 p.m.? Let's get into Section 2, Global Cues and the Crude Collapse. These are the macro triggers that save the day. Minus 9.41%. Take a second and think about that. That number is the undisputed hero for Indian bulls today. That is how hard crude oil collapsed in a single session, dragging prices all the way down to 8,785 rupees. For a fast-growing oil-importing economy like ours, a crude oil crash of this magnitude is like getting a massive festival bonus. It directly reduces our import bill, it cools down imported inflation, and it gives the RBI so much more breathing room. Whenever oil crashes this hard, you can almost guarantee a relief rally in Indian equities. Now, oil doesn't just crash in a vacuum, right? It plummeted because of some major geopolitical shifts hitting the news wires. We got reports today that the US and Iran are actually moving closer to a one-page memorandum of understanding. They're essentially looking to end the immediate conflict and set up a framework for broader nuclear negotiations. Adding to this de-escalation vibe, the US operations escorting ships through the Strait of Hormuz, Project Freedom, were officially paused because of this progress. Global markets instantly priced out the fear of a massive Middle East supply disruption. That collective sigh of relief in global geopolitics is exactly what fueled that afternoon short covering rally across Asian and Indian markets. With the global winds clearly blowing in our favor, let's check out the domestic reaction in Section 3, Sector and Corporate Highlights. You've got to notice the broad-based participation across the board today. The Nifty PSU Bank Index absolutely led the charge, jumping a massive 2.84%. These government-backed banks showed the strongest sectoral move we've seen in a while. And right behind them, the broader Nifty Bank and realty sectors both surged 2.63%. Auto stocks weren't slouching either, adding 2.41%. Out of 12 major sectors, an impressive 10 finished solidly in the green today. Only energy and FMCG saw minor profit booking. Look, when financials and real estate are marching higher together, that is a very, very bullish signal for overall economic sentiment. But it wasn't just global news driving this sentiment. We had some rock-solid domestic fundamentals supporting the move, too. First, the India Services PMI accelerated to a 5-month high of 58.8. That proves our domestic demand remains extremely robust. Second, the Union Cabinet just approved a massive 18,100 crore outlay for the ECLGS 5.0 scheme, injecting some much-needed credit support into MSMEs and stressed airlines. And finally, a massive corporate trigger. HDFC Bank shares shot up over 3%. An independent governance review found no major lapses following the chairman's exit, which completely cleared the overhang on the stock and paved the way for the CEO's reappointment. When the heaviest weight in the Nifty moves up 3%, you better believe it drags the entire market up with it. All right, let's translate all this news into actionable technical levels, moving on to Section 4, Decoding Open Interest Data. If you are trading the upcoming Nifty expiry, this open interest chart perfectly maps out the battlefield. The green bars, representing put options, indicate exactly where traders are building strong support floors. On the flip side, the red call options show us where sellers are frantically trying to build resistance ceilings. By looking at where these positions are clustered, we can clearly see the battle lines being drawn between the bulls and the bears after today's crazy session. So here is the breakdown. The bulls have laid down a massive safety net. Maximum put open interest stands firmly at the 24,000 mark. That proves today's 1 p.m. dip found a rock-solid floor. We're also seeing secondary support shifting higher to 24,200. Meanwhile, the bears have definitely retreated, but they are aggressively defending the 24,500 mark. That's where we see the highest call open interest, followed closely by 24,800. So, if you're stepping into the market tomorrow, this 24,000 to 24,500 range, that is your primary playground. Which brings us to our final thought for the day. With global geopolitical tension showing real signs of easing, a massive 9% collapse in crude oil acting as a massive tailwind, and option riders building an absolute fortress of support at 24,000, are the Indian bulls finally ready to slice through that 24,500 resistance and test new all-time highs in the next session? The data strongly suggests the momentum is in their favor. But remember, in the markets, complacency is your worst enemy. Keep your eyes glued to those global overnight cues and closely watch how the first hour of trading handles that 24,300 zone. Until next time, stay focused, manage your risk, and happy trading.